financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. As you heard, my name is Jerry Robinson. I'm an economist, an author of the book Bankruptcy of Our Nation. I'm an investor. I also coach many people here at followthemoney.com, our members and students all around the world. You can become a member here at followthemoney.com if you want to get ongoing coaching, mentoring, and all of our independent trend research. We do a lot of research on commodities and stocks, on cryptocurrencies, ETFs, all kinds of research, as well as real estate. So there's a lot there at followthemoney.com. But on today's episode number 421, we are continuing our 5-part series on the 5 levels of financial freedom that we've developed here at followthemoney.com. Today's titled The Building Blocks of Financial Freedom, Part 3. So we have already gone through the first 2 levels in our last 2 podcasts. So if you've missed those last 2 podcast episodes, I encourage you to go back, because this is, a 5-part series that we've been focused upon, specifically talking about how you can achieve financial freedom, right? How you can achieve true financial security. And that begins with wisdom, right? It begins by not putting the cart before the horse. So many people want to skip ahead and they want to move to the good stuff, as they often call it, the fun stuff. They want to invest in stocks. They want to invest in real estate. They want to flip houses. They want to get involved with cryptocurrency. But oftentimes what you find is that people who are eager to do that early in the game oftentimes don't have a lot in the way of a foundation laid. They don't often have a good amount of savings. And what's interesting is that when you actually have a good amount of savings, a cushion of savings, you actually end up being a better investor, right? And the reason why this is the case is because whenever you have a financial cushion of cash, then you don't have to swing for the fences every time you invest, right? You don't have to constantly be trying to get 100x on your investments. Of course, whenever you try to do those kinds of investments, you do these risky investments trying to make money, well, you're often taking, the most risk possible that you could. And people oftentimes will take those risks because they have to hit a home run, right? They have to hit a home run because they don't have any savings. They have little savings. And so they constantly have to go from, hitting a home run to a home run. And then of course, oftentimes those are very risky assets that they're investing in, maybe penny stocks or whatever the case might be, or maybe like a risky real estate venture. So my point is that it's very important to lay a solid and sound foundation if you desire long-term financial freedom, right? Very, very important. And that's what we're doing in this series is we're going through line by line, level by level, level 1 through level 5 of our 5 levels of financial freedom. So we've already talked about level 1, which was all about building that emergency reserve. So we talked about creating a charitable giving plan at the very outset, similar to a financial plan, but only estimating a goal of how much money you want to give away over your lifetime. Very powerful exercise. We even have a worksheet you can find, followthemoney.com/giving. We also talked about the importance of creating a go bag, creating 3 months of food and water supplies, beginning a systematic savings plan, and then also building up 2 months of liquid savings based upon your current gross monthly income. All right, so that's where we started in level 1. That's, if you want to go back and listen to that episode, I strongly encourage you to do that if you haven't heard it. Then in our last episode, we covered level 2. And level 2 is after you've gotten all of level 1 done, once you've gone through that list, through the checklist, and you've done all of those things, then you move on to level 2. And level 2 is all about asset, income, and life protection, right? And so you're focused here on auto, home, and liability insurance, disability, health, and long-term care insurance, as well as life insurance, wills, and trusts. Again, many people are tempted to blow right past this level because they want to get to the fun stuff. They want to start doing investing. That's what they think that the whole financial realm is, and that's not the case, right? You have to build a foundation, and if you do it in the proper order, then your investing is going to be much smoother. It's going to be better because you won't, again, as I had pointed out earlier, you won't be putting the cart before the horse. You won't be trying to hit a home run with every single investment. And that stresses people out. It's very stressful when you're trying to, invest in risky ventures just to make a little bit of money because you're starting from zero. So the best thing to do is lay a very sound foundation. And when you go through level 1 and level 2, you're going to be in better shape, financially speaking, than probably 90% of Americans. I mean, I've coached hundreds of people, if not thousands of people over the years, but I'm talking about one-on-one. And I have seen the power of laying a good financial foundation. I've seen it. I've seen people go from zero all the way to, millionaire. I've seen it over and over and over again. You can do this. Anyone can do it if they commit themselves to achieving it. So now we've talked about those first 2 levels, and I don't want to belabor those because we already have them. You can go back and listen to them. So in today's special episode, we're going to focus on level 3. All right, so if level 3, and when you look at level 3, you can go to our 5 levels of financial freedom online, followthemoney.com/5 levels. And there you'll see all 5 levels, and you'll see that we're focusing today on level 3. Now, level 3 has 3 components of it. So remember, these are comprehensive, and we're laying line upon line, level upon level. So level 3 assumes that you've already gone through level 1 and level 2. So in level 3, we have 3 components, and we're going to go through each of them. The first one is to build a total of 6 months of food and water supply. Now, that is basically being raised from the 3 months of food and water supply that you created in level 1. So really, we're just doubling it, right? We're doubling it in level 3. The second component of level 3 is that we're going to build a total of 6 months gross income saved. All right. So again, in that case, we're just basically boosting what we had done in level 1. In level 1, we built 2 months of savings just to get us going. Now we are moving into level 3. This is where we're going to build that 2 months of savings all the way up to 6 months of gross income saved. Okay. We'll go through each of these in a minute. And then the third component of level 3 is that we're then going to diversify that 6 months of gross income. And we're going to explain what we mean by diversifying and what that would look like. But let's just now begin by going through each of these 3 components and talking about what it means in level 3. What does it mean to build a total of 6 months of food and water supply? Well, when you hear that, you may think to yourself, well, that seems kind of alarmist. Are you talking about, running out into the hills and, living off canned food? No, of course not. However, grocery stores don't make food, they just don't make food. And we have learned this, especially in the wake of the supply chain hiccups, more than hiccups. In fact, they've really been pretty outrageous supply chain breakdowns in some areas of the world where in the wake of COVID-19. So we have really seen this pandemic-driven supply chain stress, and it's created not only massive inflation for many of the consumer goods that we buy on a daily basis, but it's also, caused us to see things run out, like some supplies just run out. And so when we think about level 3, what we're doing here is we are building a long-term food storage. Now, when I think of food storage, at least whenever I have thought about it in the past, before we developed these 5 levels of financial freedom many years ago, I would often think of like the Y2K. I remember Y2K and everybody was storing up food. The end of the world was coming. And nobody really knew what to make of it. So I remember, storing up a little water and a little food. I wasn't totally bought in that Y2K was going to be a disaster, but at the same time, nobody really knew, So I just kind of added, a few extra things and was ready for that day. And nothing happened, of course. Y2K came and went. Back at the beginning of 2000, people were worried. If you're not familiar with that was people were worried about the calendar going from the 1900s to the 2000s, and that it might disrupt banking and it might disrupt financial institution data and all of this. But none of it happened. Well, the point is that even though it didn't happen, many people had really hoarded a lot of food and water, and then that kind of turned people off to the idea of being prepared. So preppers kind of got a bad name in the wake of the Y2K crisis. But then, of course, over the last couple of decades, we've seen a couple of times where we've hit hard times and people have needed to have that food storage. Let's just think about the pandemic, right? Where, many grocery stores, they were running out of food, aisles were bare, and that's a problem. That's a real big problem if you don't have a supply. Also, back in 2008, 2009, people were losing their jobs. It was a tough time. And so having food and water storage is vital. And it's not just economic breakdown that can cause it. We've seen numerous instances from our own members who live perhaps in Florida or Georgia or somewhere on the coast where they're hit by a hurricane, and even down in Texas. And we have seen so many of our members even so thankful that they had developed a food and water supply storage to be able to weather those kinds of storms. Now, the way we do it is we actually just buy more of what we like to eat. So instead of buying, a bunch of things like, buying, big emergency food kits from Sam's or, whatever, or, from some website, what we do is we say, what do we like to eat? And then we just buy more of it. And so canned foods will often stay good for, a couple of years, however many years. You can also can your own food and make it last even longer, especially if you have a garden. We have a garden, so that's one thing that we could do. We really haven't canned much of the food that we have, but we do freeze it. We also try to save it in other ways. But the point is, or dry it out and then store it that way. But the point is that, you don't have to, go out and buy a whole bunch of emergency kind of food that you wouldn't normally want to eat, right? Some of this stuff is pretty nasty. I mean, if you've ever tasted it, it's just not that good. So the point is we have decided really to focus upon buying the things that we already enjoy and just buying extra. And the goal is, of course, is to be able to have a 6-month food and water supply. And you just use a first in, first out food rotation system, right? So you're always looking at the expiration dates, and we're just, we're eating what we store and we're storing what we eat. And so that's how we've approached it. Now, we've talked a lot about this topic, and we've even made videos on it. Again, when you go to our followthemoney.com/5 levels page, you're going to find a tremendous amount of information there where you can drill down into level 3. And you can read all about this. We have, again, videos, and we've even done podcasts over the years on this same topic. Now, when it comes to water storage, that's a little more difficult, especially whenever you're maybe in the city. Now, we moved out of the big city. I uprooted my family back in 2012 to move out of the big city, and we moved out into a rural area where we could have a garden, raise a garden. We could raise chickens for meat and eggs. We were getting ourselves off of the grid for electricity purposes, and we've been doing that now, for about a decade. And we strongly encourage people who have the ability to do that to do that. The cities we feel are going to continue to be a dangerous place, not just from the fact of just over concentration or overpopulation, but whenever you have wicked weather or whenever you have even kind of riots that we've seen. We've been talking about riots coming for years, and we've seen riots. We've seen, violence in the streets. It's just a dangerous time in general. And I think the further you can get away from those high density, population density kind of areas and get out to a place more rural, you're just in a little better place. But if you're in the city, you can still shelter in place in the event of an emergency or a disaster. But when it comes to water storage, what we did was we moved to an area that had plenty of water, right? So that was certainly way up on our list when we were strategically relocating. From the big city, we moved to an area that had no water stress. Like if you go out west, for example, and you look at places like Nevada, California, Utah, some of these areas are underneath big water stress because they're dependent upon just a few lakes that are out there. And those are depleting, droughts and all of this. So, first of all, the best thing to do, of course, is move to an area where water is not a major issue. But secondly, you can also, if you buy land, you can buy land that has water sources. So we have, a pond and a wet weather creek that runs on our property, a couple of wet weather creeks actually that run on our property that, allow us to be able to capture water when we need it, right? And we also capture water from rooftops. We actually have a setup for that as well. So we always have extra water, and then we also have big blue food grade barrels that we also put water into. So just in case, and we just have that on hand. Now you may say, well, that's just kind of taking it too far. I don't really need to do that. Well, maybe you don't. Maybe you can just check that off the list. Maybe as you're going through our 5 levels, you can say, I'm not worried about that. The point is, though, is that when you need it, it's going to be tough to be able to get it, right? And we believe that we're in a dangerous world, and we think that being prepared is not a bad idea whatsoever. So another way that you can do water storage without actually doing the storage part is to buy a really high-grade water purifier. One of my favorites is the Catadine Pocket Ceramic Water Filter that you can purify water down to about 0.02 micros, which is enough to block out most particles, most bacteria, most viruses. And so anywhere you can find, a water source, whether it's a pond or a stream or a lake or whatever, you can go down and get, that water and then run it through your purifier, your filter, and then you'll be able to have water. You can also, do portable water supply. That way you could also look at, storing water in jugs or water in big plastic barrels that are food grade, like we had talked about. But we recommend, playing it safe and having up to 2 gallons per day per person for an emergency. And so we've talked a lot about that, a 6-month food and water reserve, stocking up on food that you already consume that has long shelf lives. And this is a really powerful way to really protect against an uncertain future. So that's the first step. That's the first component of level 3, is to build up your food and water supply to 6 months. Now, the next part of level 3 is the 6-month savings reserve. So remember, in level 1, we built a 2-month savings reserve. Well, in level 3, we're going to kick it up a notch, and we're going to take it up to 6 months. Now, I want to say this up front because in level 4, which is we're going to cover in our next podcast episode, that is where we begin to invest, right? We're going to talk about investing on the next podcast episode. We're going to talk about what that looks like. So once we actually begin to invest, but saving is not the same thing as investing, right? It's a very different thing. Saving is what we're doing here in level 1, and we're saving up 6 months of our gross income. And we've all experienced a dilemma where we've needed our savings: a flat tire, a trip to the emergency room, urgent travel for family emergencies. You break your cell phone on the kitchen floor, you lose a job, situations that are unexpected. They can happen to anyone at any time. And if you have money in the bank to be able to weather those kinds of storms, then you're going to be better off. But far too often, people live paycheck to paycheck. And so whenever an emergency happens, like a flat tire or whatever, they have to go out and use their credit card in order to take care of that. And that kind of perpetuates the vicious cycle and keeps them in a place where they can't really get ahead. So what we're doing here in level 3 is we are committing to building 6 months of liquid savings and keeping it at all times. So imagine it being like a big bucket that you're going to fill up with 6 months of savings. Now, for the remainder of your working life, the way we approach this 6 months of liquid savings is we keep it topped off at all times. So that means that if we have to use part of that money for an emergency in the future, which is exactly what it's for, then we are going to fill that bucket back up before we do anything else. So in other words, we're committing here to keeping 6 months of liquid savings at all times. Do you know how good it feels to have 6 months of liquid savings at all times? At all times, right? So no matter what's going on, if you have an emergency, you know that you got half of a year of your salary, in savings, in cash, liquid, that you're able to touch, use for whatever purpose, and it doesn't require you to go into debt, right? So this is so powerful. So let's break it down and talk about the numbers here. So like if you earn $60,000 in gross annual income, then what you're doing here is you're going to build a $30,000 reserve, right? If you make $200,000 per year, it would be a $100,000 reserve. The key here is to plan for anything, whether you lose your job, you're temporarily out of work for a few months, instead of having to sell your belongings or just to pay your mortgage and bills, it'd be better to have some cash in the bank. And, it's vital that we have this savings reserve because, as I had mentioned to you before, not only is it wise and does it allow you to take care of problems without having to go into debt, but it also, as I stress to you, makes you a better investor. This is how you set yourself up to be a good investor. Good savers make better investors. And again, the reason is because they don't feel the need to hit a home run every single time they go to invest, right? Because they have savings. They're not trying to hit a home run with every single investment. They can just comfortably begin to invest in high quality assets without the idea that they have to hit a home run because they're broke, right? They actually have money in the bank. So many people will not save because they'll say, well, I'm just going to put all my money into the stock market. This happened to me, by the way, whenever I was just out into the workforce. I had my first big corporate job. I got my first benefits package, and I was so excited. And all of the financial gurus on TV or radio were saying, make sure you max out your 401k, stuff it full of all, put all the money you can into it. So, I didn't know what I was doing at the time. And so I just went ahead and started stuffing my 401k full of money. And then of course I was pretty much burning through the rest of the cash. So it was good that I was putting money away. It's not a bad thing. But the problem is I didn't have any savings. I didn't have any cash savings. So whenever, so I had this new job and I was stuffing my 401k full of money, and then I was living off of everything else, and I was just barely getting by, of course. And then I wanted to buy a house, right? Well, guess what? I don't have any money, right? I got to go. So what am I going to do? Right? Well, how am I going to? Well, I had to borrow the money. And then of course, then you got to furnish the house. You got a house and you got to furnish it. How are you going to pay for it? You got to pay for it with a credit card or with a loan, or with a furniture store will give you credit or whatever. So I was having to depend upon borrowing to buy the house. Just even for the down payment, I had to borrow, money to furnish the house. Whereas I was stuffing money into my 401k. I needed cash, right? So I'm going into debt and stuffing money into the 401k, and it didn't make any sense. So what I needed to do at that time was to have some cash savings and then begin to put money into that 401k, right? I needed to have some cash that I could take care of basic things as I'm building my financial life, and I'm not having to go into debt for every little detail, right? Because I have cash in the bank. But again, good savers make better investors. You don't have to swing for the fences with every single investment that you make. You can actually just begin to invest in a wise and prudent way in high quality yielding assets without having to, again, go into debt in the process, right? Because you got cash in the bank. So for some people, that becomes a pretty big uphill battle because they look at the 6 months of liquid savings and they think, how am I ever going to save this? You know, if you're making $50,000 a year, saving $25,000 may seem insurmountable. I want to push back on that though, and I want to stress to you that it is absolutely one of the most important things you can do if your aim is financial freedom. First of all, if you have the ability to save the $25,000, if you make $50,000 in this case, then you're showing that you have the discipline that's required to be able to do this, right? So you've got to show some discipline. And once you have that savings, it's going to dramatically change the way that you view the world. It's going to dramatically change how you respond to emergencies, problems, situations that arise, and it's going to keep you from digging yourself into a big hole of debt. So I want to stress the importance of building that savings reserve to a total of 6 months gross income. And here we're going to continue to systematically save our money. And what we're doing is how are we saving this money? We're taking a percentage of what we earn each month and we're putting it back into our savings. Now remember, we talked about building a systematic savings reserve, and we talked about actually systematically saving money in level 1. So you want to go back and listen to that. And I encouraged you that the goal here is to save 15% of every paycheck that you get. Every single time you get paid, 15% of it can go back. And it's going to take you a while to build 6 months of liquid savings by saving 15%. But if you can save more, that's great. I mean, if you go to countries like China, for example, you'll see that the savings rate's much higher because they don't have many of the social safety nets that we do here in the United States. They don't have a Social Security over there. So they have to save. If they don't save, they're in trouble, right? So some people just realize I've got to save money. So they're saving, 30, 40% of their paychecks. Well, here, because we have access to easy credit, and so many other things, it's easy just to say, well, I'll just spend everything that I have. But that goes back to the profit principle we talked about in level 1, is the fact that if you don't save any money from what you're doing, well, then you don't really have any profit, because profit is what you keep after you spend, on all the expenses that you have. And many people just take the paycheck they get and literally just turn around, cash it, and then give it to other corporations. And they have nothing left to show. They have no money in the savings. I mean, there's none. I mean, it just all goes to Walmart. It goes to Amazon. It goes to the utility company. It goes to the mortgage company. And there's just nothing left for them, right? Well, that just can't be. You're never going to get ahead that way. You've got to say, look, this 15% here of this check is going into the savings, right? And I'm going to save this, and I'm going to build up a pile of 6 months of income so that I'll be able to weather the storms and also be a better investor, right? And I want to encourage you here, one more thing before we move on to the third component of level 3, and that is don't be tempted to begin investing before you have your savings completed. There'll be a temptation for you to begin investing and saying, well, I don't really need 6 months of savings. Maybe I'll just I can get by with 2 or 3. Look, if that's what you want to do, I mean, it's your plan. But I'll tell you just from long-term research, and in my own case as well, coaching other people, 6 months is really the cushion that you're going to want. I can kind of tell you this up front. You're going to want 6 months in liquid savings whenever the rubber hits the road, kind of thing. All right. So that's level 3, the second component of level 3. Now, the final step, and this is an interesting part that many people kind of miss when they're creating their financial strategy. And that is that we're actually going to diversify the savings that we have. Because remember, the US dollar itself over time is losing value. If you don't believe that, just look at the price of a stamp, or look at the price of university education, or look at the price of a loaf of bread. I mean, your $1 that you get doesn't spend the same, next year as it did the year before, or next decade as it did the decade before, right? So you're going to probably want to take those dollars and you're going to want to diversify them in a way that allows you to prevent the eroding factors on money from just literally destroying that over time, right? So the way we do this is through diversification. So I've been explaining the importance of diversification when it comes to your finances for more than 15 years. I believe diversification should apply to at least 3 separate areas of your financial life. Number one, savings diversification, right? So this is what we're talking about right now. We're talking about taking the savings that you have and diversifying it. We'll talk about where in just a minute. The second area that you should diversify in my opinion, is your investments. Diversifying your investment dollars across a wide variety of asset classes. I believe that's a very wise thing. The other area that I've been teaching on diversification for many years is income diversification. So creating multiple streams of income in your financial life. Now, we're going to talk about that in level 4 and in level 5. So we'll be talking about multiple streams of income diversification, investment diversification, but also savings diversification. Now, we've actually created a sample savings strategy called the DSL savings, the Diversified 6-Month Liquid Savings Strategy. You can find that on our website at followthemoney.com/DSL. D for diversified, S for 6 months, and L for liquid, so DSL. Our DSL savings, we just recently did a new study where we went back and we looked at how the DSL strategy would have worked. And what we do is we take the DSL savings and we allocate 1/3 to US dollars, 1/3 to stable foreign currencies, and 1/3 to precious metals, right? Now, the DSL savings is not retirement savings. It's not education savings. It's not investing, right? What it is it's an emergency fund. You have that, and so you won't have to rely upon credit cards when you need cash. It's also an opportunity pool of capital. That is, you have liquid cash to take advantage of opportunities that you wouldn't have had otherwise without the cash, right? So it's a very powerful thing. Now, when we look at the diversified 6-month liquid savings plan, we've actually got back tests of our strategy on the website, followthemoney.com/DSL. We did a 5-year back test, an 11-year back test, a 21-year back test, and a 31-year back test to show how the return on savings would have been over that time period. And you can go in here and see, but it's pretty fantastic how the eroding effect of inflation on a savings account really just devastates that savings over time. And that if you diversify it using, you can really just kind of choose your own diversification, but we're going to show you how we have done it on this website, followthemoney.com/DSL, that webpage. But I'll just give you a perfect example. So our DSL savings, for example, over a 5-year period, returned 22% from 2016 to 2021 versus a 5.8% a return for non-diversified savings, right? So if you just put it all in US dollars. Over a 21-year time period, the percent return on DSL savings rose 196% versus a 38% return on the non-diversified savings, right? So that's over 20 years. So that's a pretty big difference, right? And we also even included the idea, we just kind of threw in for kicks. What if you just threw in just a little bit of Bitcoin into that DSL savings? Some people would say, no way for me, and that's totally fine. But we just decided to run a test and say, what if we kept a nickel out of every dollar saved in Bitcoin? And quite frankly, as you can imagine, that really outperformed incredibly. So the point here is that you can diversify your savings so that it's not simply just being eroded through inflation. And you can consider using precious metals, stable foreign currencies, even Bitcoin, for example, in addition to US dollars. Now, again, your risk tolerance will all play a role in this, and you have to be willing to accept that risk if you want to use these assets with your savings. But overall, the main point that we're making here is that you do want to have some diversification of that savings, because it appears from the studies we have done and from our own savings itself, we have seen that we've been able to beat what you would typically receive from the bank, or on 100% dollars, if you diversify them and just think through it a little bit. So that's the third component of level 3. Diversify your savings. So let's go through them one more time. We have in level 3, building and diversifying our financial reserves. Number 1, we're going to build a total of 6-month food and water supply. Second, we're going to build a total of 6 months gross income saved. And then thirdly, we're going to diversify that 6 months liquid savings to allow us to overcome and compensate for those eroding factors on money. Hey friends, Jerry Robinson here from Follow the Money Radio. 2022 sure has been flying by quickly. We're already halfway through the year. Summer is here, and we are running a very big summer sale here at followthemoney.com. With inflation raging the way that it is, and many people are looking for ways to earn more income through multiple streams of income. Maybe they're learning to learn a new skill like investing or trading. These are the things that we can help with here at Follow the Money. We've been helping people all over the country and the world for over a decade, learning how to break free financially. We have many, many courses for our members, lots of ongoing services, and right now is probably the very best time to become a member. We have a deep discounted sale right now going on. Simply go to followthemoney.com/join and find out the details. No coupon code is required right now to have access to this great sale. Lock in cheap prices for right now with a followthemoney.com membership. We have a silver, gold, and platinum plan. Go choose which one is right for you and become part of our global investing and trading community. Come invest in your financial education at followthemoney.com in 2022. That's followthemoney.com/join. Get all the details there, and I sure hope to see you on the other side.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
Welcome back to the show, friends. You can find us online at followthemoney.com. We're right there 24/7 on demand for all of our members. Whenever you log in, you are actually coming into a vast area that includes hundreds of hours of videos that you can watch, education on how to become a better investor, how to become a better trader. Whether you want to trade options, whether you want to trade stocks, whether you want to trade ETFs, whether you want to invest in cryptocurrencies or real estate, if you want to create multiple streams of income, everything that you would want to know about, building a good investment strategy or learning to how to trade or invest, it's all there. Followthemoney.com. We've been here helping individuals just like you since 2010 when we started the website. And as I was mentioning, as you heard on that piece just a while ago, we do have an incredible deal right now where you can start Follow the Money. If you've been looking at our website and saying, I'm thinking about this, well, now's a great time because you can become a gold, platinum, or a silver member for only $1 for your first 30 days. I mean, it's a pretty risk-free kind of deal. And you'll even get your dollar back if you want it back. If somebody said, I don't like it, I want my dollar back, that's no big deal. So, I mean, we're happy to be here to help and serve you. And for $1, you really can't go wrong. If you've been thinking about Follow the Money, now is a really good time. So, yeah, followthemoney.com/join. You just choose whichever membership you like. If you want our daily many people just want our daily email, which comes with our daily trading idea. We put out a one swing trading idea every day, and you can actually see on our website how those are performed. We actually have a track record of all of those ideas we've ever put out. And you can see how those have performed, and many of them do very well. So if you're just looking for one good swing trading idea every day and access to our daily newsletter where we cover many different topics, then that's the silver plan. But many people want more. They want access to our crypto investing ideas. They want, more ideas than just one new trading idea every day. They want access to all of our ideas. They want, access to our ongoing video coaching. They want access to those hundreds of hours of on-demand videos. That comes in our gold and also our platinum plan. The platinum plan actually comes with our access to our private Twitter feed, also to our options trading university. Just so much there waiting for you as a member here at followthemoney.com. So just want to let you know that sale is not going to be going on forever, but it's a $1 sale. You can try out the membership and see what you think. We'd love to hear from you. And by the way, anytime you have a question for us, feel free to reach out to us. You can go to our website, followthemoney.com/contact. If you hear something on the show you have a question about, or you just have a question you want to ask for a future podcast, just reach out to us at followthemoney.com/contact. All right, friends. Well, with all that said, that pretty much brings us to the end of today's episode. As always, I'd like to leave you with a final word. This time, it was spoken by the U.S. President John F. Kennedy when he said, "The best time to fix the roof is when the sun is shining." I feel it's pretty appropriate to be thinking about that quote today in the fact that we've been talking about saving and building our financial reserves. When the sun is shining, that's a great time to be fixing the roof. You don't want to wait until it rains, of course, and that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.